I know that there's a lot of turbulence in the market at the moment, and as an investor there's a couple of things that we can do to minimize that risk while still having a really nice income. So today I want to have a quick chat about the common versus preferred shares. Now the preferred shares are not just for retirees, but they can offer not only exceptional income but also offer more security than the common shares, while also giving you the opportunity for capital appreciation. So my friends, let's get into it. Okay, so as we begin to think about what preferred stock is, turning to Investopedia, but one of the really basic ideas is it's not common stock. It is different to common stock. Now I know when most people think about stock holding, they think about owning what we call common stock. Now common stock does give you, say, voting rights and some form of control, usually over the company, in a very small sense, because most of us will never own enough shares to actually exercise any meaningful control. Now the preferred stock is a little bit different. Now it gives you greater access to the dividends, and it's also important to note that all of the preferred stock has slightly different aspects and features there. So yes, it still represents an ownership in the company, but it gives you greater claim to the income. So you have a higher claim on and you usually then will have a greater claim on the assets as well in terms of a liquidation. So it gives you usually several forms of security here. Number one, if something goes really wrong with the company, you have more claim on the assets. And then number two, if there's an issue with the income, there might be a dividend cut or a dividend suspension for common stockholders, but the preferred stockholders are still going to get those dividends. Now in many cases as well, the preferred stock will mean that even if the company stops or ceases the dividend payout on the common stock, even if they might do it for the preferred stock, it's often cumulative. It will build up and they'll have to pay you back what they owe you on the preferred stock. But again, every stock is going to be different. So you do need to check out the details for the preferred stock each time. Now switching over to Seeking Alpha, a couple of really important points here. When we start to think about here, this is for Arbor Realty Trust preferred stock F. Now it's listed as paying a 6.25% dividend yield, but that's on a value of $25 at which it was issued. Now the current value is in dollars. Now that means that the current yield of 6.25 times $25 compared to the relative price now, the market price, gives us a yield now at 9%. But it gets better because there's also the opportunity that we're going to be able to pick up some capital appreciation. So if you're thinking about that, $17 is simply $8 less than the $25. So if it goes back up to $25 from about $17, we're talking about potentially a 47% gain on the value of these preferred shares. Now how likely is that to happen? And that, my friends, is probably part of the magic of the preferred shares. So here we have information for income investors. Again, we're looking at Arbor Realty Trust, Series F. A couple of really important points there. It's at $25 per share. It could be redeemable in 2026, so several years away at that rate. So you have the potential there, as I said, for potentially up to 50% gain on this as well in terms of capital appreciation on top of that income. The income will be paid quarterly, and there's some schedules there for the payment as well. So there's some really good opportunities here. So if you're thinking or worried, thinking about the common stock being simply too risky, the preferred stock is often one way of mitigating some of those risks. So what do you think? How much preferred stock do you hold in your portfolios, and what would make you more keen or more interested in investing in preferred securities? Let me know in the comments down below, and I'll get back to you soon.